We are now joined by Jim Rogers, Chairman of Rogers Holding. Jim, good afternoon. What a delight to have you on ET Now. Jim, let me first start with a very basic question. How do you view the current situation in Europe, given the fact that how Spanish bond yields of late have expanded, and it is evident that austerity versus growth in the near term, it is growth which is clearly moving around?
No. Nobody in Europe nobody in the West is managing their austerity problems very well. Just look at the numbers. Every single one of those has higher and higher debt. Even Greece, which theoretically wrote off a lot of debt, the debt is going higher. This problem is not being solved. This problem is being pushed down the road. It's going to come back, and it's going to come back worse the next time around. Be very careful.
Hi, Jim. Afternoon. So would you say that the markets are more news-driven than reacting to fundamentals currently?
No, well, I mean, the news has an effect for maybe an hour or a day or so, maybe even a week. But no. Markets basically always are reacting to the fundamentals. There these days, there's this noise, the noise in the markets, partly because there's so much of the economy on TV these days. But no. In the end, in the longer, even in the medium term, markets rely on fundamentals, not on the short-term news.
So, Jim, how would you look at 2012 in terms of growth? Would you say that liquidity stimulus in countries is the main reason why economic data of late has been strong, but the real concerns are far from over?
No, of course. I mean, central banks around the world have been printing staggering amounts of money over the past 4 years. So, no, all of this is artificial. It's based on huge amounts of money that are being printed and huge amounts of money which are being spent. There are 40 elections around the world this year, and all of those politicians want to be re-elected. Some of them are pretty big countries, France, America. You know, we've had some big countries with big elections, and next year the Germans are having elections. So you're going to see a lot of money being spent, a lot of good news for the people who get that money. For the rest of us, the situation continues to deteriorate.
Jim, in the emerging markets, where do you see a faster and more sustainable growth number coming in? Which region?
Well, the faster the numbers will be better in economies which are well managed and which have commodities, because commodities are in a bull market. I mean, Indonesia is doing much better this decade than they did in the 90s because there was a commodity bear market in those days. Australia is going to do better than Belgium. Canada is going to do better than the United States. So you look for well-managed countries which have a lot of commodities, and you'll probably make a huge amount of money. I'm not putting money in the Congo, which has a lot of commodities, because it's not well-managed. I would look at well-managed commodity countries.
All right, Jim, let's talk about your favorite topic, commodities. Now, commodities have not done well in the current quarter, nor have commodity currencies like Australian dollar or New Zealand dollar. How would you view commodities in the current market environment?
Well, in my view, commodities are in a secular bull market, a bull market which has several more years to go. I own commodities. I'm not thinking about selling my commodities. If they go down, I'll buy more. Until a lot of supply comes on stream in all commodities, commodities have to be a good place to invest.
Jim, geopolitical tensions still surrounding Iran, still unabated, and the U.S. inventory is already at a 21-year high. Crude is still much higher. Where do you see the prices headed?
Well, I'm not smart enough to know that. I mean, I presume you can watch some of the TV, economic TV stations, and you'll figure all of that out. I do know that the world's known reserves of oil are in decline, and unless the world finds a lot of oil in very accessible areas very quickly, the surprise is going to be how high the price of oil stays and how high it goes. Now, if Spain goes bankrupt next month, everything is going to go down, including oil. But if that happens, I would urge you to buy a lot more, because the price of oil over this decade is going to go much, much higher.
So, Jim, looking at the current economic uncertainty at a time when global growth scare is back and economic growth is quite anemic, which are the sectors you would recommend our investors or our retail viewers should put their money to work? Bonds, commodities, equities?
Well, the most exciting area of the world economy for the next 20 years or so is going to be agriculture. The best thing you can do is become a farmer. That's That's where the money's going to be made. That's been a disaster for the last 20 years. The farmers are going to be driving the Lamborghinis in the next 20 years. The stockbrokers are going to be driving taxis. The smart ones will learn how to drive tractors so they can work for the smart farmers. Anything to do with agriculture, seeds, tractors, fertilizer, anything, water, anything to do with agriculture is going to be extremely profitable over the next 20 years.
So Jim, amongst the industrial agro-commodities like cotton as well as rubber, where there has been a decline due to the China slowdown, how would you see these commodities going forward?
Well, all agricultural commodities are going to go much, much higher. We have serious problems developing in agriculture. The average age of farmers in America is 58. In Japan, it's 66. In Australia, it's 58. I mean, the world's running out of farmers. So unless the price goes much, much higher, we're not going to have, I mean, we're going to have very, very, very great shortages in agriculture. So prices are going to go a lot higher because of the serious fundamental shortages which are developing.
Jim, Indian government has recently opened exports in sugar and cotton. What is your reading into this policy change, and how will this impact cotton and sugar prices in the global markets?
Well, I would hope, you know, India has a history where you could be one of the great, have been one of the great agricultural countries of the world. The Indian government keeps messing with the agricultural industry. It does this, it does that. If India would, the Indian government would just get out of the way of Indian farmers, you could see fast production coming out of India. All of these short-term measures are doing nothing more than disrupting the Indian farmers and the Indian markets. Unfortunately, hundreds of thousands of Indian farmers commit suicide every year because it's been such a wretched business and because the Indian government just makes it worse by cluttering up the market and trying to over-regulate it. It would be good for the world, it would be great for India if the Indian government would stand aside, let the farmers have their head and make their profits. Then the world would be a lot better off, and India would certainly be a lot better off.
Jim, how do you see the Indian rupee decline to 4-month lows? Also the S&P downgrade and the fiscal economic challenges that the country is currently facing?
Well, as I've told you before, India is certainly a magnificent country to visit, but I'm not optimistic about the rupee. You have huge problems in India. You have a debt-to-GDP ratio of over 90% now. I'm not optimistic about the euro going forward, about the rupee going forward.